Before we get into the charts, we're going to look at this article from FX Empire, natural gas prices pullback after EIA report. So yesterday, the EIA released the weekly natural gas storage report, which indicated that gas and storage increased by 104 billion cubic feet from the previous week. Not surprising if you look at the U.S. natural gas supply and demand. What we can see for the last several days is that we produced a little over 100 billion cubic feet per day, but the demand was a little under 100 billion cubic feet per day. So that's a difference of, say, roughly 10. So we're producing an additional 10 billion cubic feet per day for the last 7 days. So analysts expected that the gas and storage would grow by 113 billion cubic feet per day. So the report exceeded analyst estimates. At the current levels, we are at 353 billion cubic feet above the 5-year average for this time of the year. The current demand for natural gas remains low, so it's not surprising to see that stocks are building at a robust pace. Bulls hope that demand would grow after June 15th due to warmer weather, but it remains to be seen whether such hopes would provide sufficient support to natural gas prices. Okay, so let's go to the charts. And I do want to go to this level, this 238 level that I had marked off. Again, that's where I was expecting price to pause, as you have the blue and the orange moving average serving as a dynamic resistance line. So we did have a steep rise in price, only to see it decline as it hit this level. The low is at 234, and that was 2 weeks ago. After this huge decline in price, that was the bottom, and this particular candle was the day that investors sold or bought back their shorts. All right. Now we have the regular trading session starting in 6 minutes, and not sure how to read the direction that price may go. It may pause, and the reason for that, if we look at the 8-hour chart, we can see price is reacting to this orange moving average, right? It's pulling back. If we go to the 4-hour chart, we could also see again price reacting to this dashed white line. So on the 8-hour and the 4-hour, you have moving averages serving as support. Again, on the 2-hour chart, same thing. Price is reacting to this blue moving average. If we go to the 1-hour chart, we can see that the moving averages, again on the 1-hour chart, should serve as resistance. If we go to the 30-minute chart, we can see price trending down, and that's indicated by the moving averages starting to turn down. Now when I look at current price and I go to the left, this is overnight trading. The real buyers step in down at the 218, but price would have to get through the moving averages on the higher time frame, as those higher time frame moving averages are serving as support. 2 hours, 8 hours, the 4-hour. Go to the 15-minute chart, we can see a slight pullback. So maybe we're pulling back to go down at the regular trading session start time at 9 a.m. Eastern Time. One thing to note on the daily chart, we have the ATR. Daily ATR is 0.115. So if I add that to the opening yesterday evening, you get roughly 2.20. Is that right? 2 point, yeah, 2 or 2.19. Let's see. So current price is roughly or opening was 2.31. If I take 0.11 from that, I get to, is that right? So it appears that price, we do have more downside opportunity based on the ATR. For the day, prices should end at this level here. Let's all right. So again, hard to read price action today. When in doubt and you're not sure, look for other opportunities. You have currencies, indices, the metals, energy, ags. So I more than likely will stay out of natural gas today, as it could be, the move potentially occurred at 5 o'clock when it was sideways during overnight trading, and then we had this huge move down, and price appears to just be range bound at the moment. Maybe the smart money is building a position. We have 45 seconds until the regular trading session starts. You can see on the 5-minute, the ATR is increasing. So volatility has been picking up, more than likely due to this move down. Let's see how we open. 5 seconds. So 9 o'clock hourly candle opened up. You have the blue moving average on the hourly chart. It's sideways, so price should go through that. Now the 30-minute chart, let's see if price is going to respect this purple moving average. So we could open up to go down on the hourly chart. However, the reward is limited, again, because of these moving averages. So it's offering you roughly $300 of reward. Typically, I'm risking $200 a trade. So minimum, I want to see a reward to risk ratio of 3 to 1. All right, this is the time in sales. Trying to see if there's any larger trades coming in to give me an indication of where price is heading next. Okay, if I end up taking a trade today, I will posted, but as of now, not looking too good. Thanks for watching. Subscribe. Please like the video.